Okay, let me make sure you can hear me and see my monitor. You should be able to see Welcome Client Support Webinar. Just a couple of you let me know if that's working okay, and I think we're in good shape here. We are recording this session. All right, any good? Can you see, can you hear and see? Testing, testing, hopefully you can. Should be able to. Okay, I think we're good to go. It looks good. All right, so welcome to the client support webinar. We're gonna have a lot of fun today. We're gonna talk about a little bit about how emotions work and how they can affect our trading. So I think you're gonna kind of like that. All right, before we get going, a few quick things I want to jump into here. Of course, there are risks involved in trading. We all know that. The key is to protect yourself against those as best as possible. And we do that through risk control. We also do that through trading with money we can afford to risk in the markets. We deal in a realm of probabilities, and we're going to talk about that today. And of course, past performance doesn't guarantee future performance. And we want you to run any of the stock things we look at today or ideas past your financial advisor. Make sure they may be suitable for you before you actually implement any real money in those ideas, because we don't know your personal situation and they do. And let's see what else I can tell you about that. Basically, that's about it. All right. And then, of course, we have several books available. Most all of you here have those. We've got books on money management. So if you need help with that, definitely check that out. And then, of course, our software tools, I think many of you have. Those of you that are here that have taken the course, you can check these out on our website as well. All right, I'm going to enlarge this. This is my topic for today. I'm going to talk a little bit about logic and emotion and how they affect your trading. So let me ask a question out there. How many people, when you first started trading, really had no idea the emotional impact that can have on your trading? You know, when I first started trading, I kind of really thought it was two things. One is you had that money, so that was your first ticket to the entry of the game. And then the second, it still is, but I thought basically if you had the money, the rest was easy. And the second aspect of it was basically, you know, just following your system and make money based on that, no big deal. You know, how hard can it be to follow a system? Well, I soon realized that, boy, it wasn't quite that easy, was it? And there was a whole situation involved with psychology. And you have to be really kind of realize a lot of times you're trading against yourself, aren't you? So one of the things that I think you have to realize is that no matter how mechanical we are or how left brain we are, all right, your right brain, you cannot separate yourself totally from your right brain. Instead, you have to train it. Okay, and I'm going to talk to you about doing that. So when we talk about the left brain, and this is kind of an oversimplification of situations. So the left brain, all right, is basically your logical brain. This is where we look at the Elliott wave. This is where we kind of look at our analysis. We get our analytics from this. We're trying to be objective. You know, 2 + 2 = 4 makes sense, and so forth. The right side of the brain is more of the emotional part of the brain and also the imaginative part. So you feel a lot of people in music, in the arts, regardless, even trading, a lot of their creativity and imagination comes from the left side of the brain. Okay, it's the emotional part. And so we're kind of, you know, dealing with two sides of the brain all the time. But in trading is one of the most amazing concepts for bringing these two brains together quickly and seeing the difference, because you analyze and then the results of the trade come at you so fast that your right brain is feeling emotions at the same time. You don't always get that with everything. So for example, you can go into a trade and it can move against you. And right away, that move against you, if you interpret that as a negative, all right, that's a negative emotion. And right away, you're starting to feel emotion of loss. So if you think about your brain situation, this is not something that developed yesterday. This is millions and millions of years of development. And so your right brain and emotions looks at certain things as good or bad. All right. If you're right, if your decisions are right, that's good. If your decisions are wrong, that's bad. And in the real world, that can have certain implications. And so therefore it gets reinforced. All right. For example, back in the cave days, if you couldn't hunt well because you didn't do it right, your left brain was not analyzing the skills needed to hunt well, and you basically didn't eat, that was a big problem. And that was an emotion of failure, of loss. Likewise, when you eat well, it's an emotion of doing well. In trading, same thing. It's hard to turn that off. If you take a trade and it goes against you right away, your emotional right brain is kicking in as bad, okay? Even though the trade is still unwinding, it's still there. So you have to kind of train that right side of the brain to work in a realm of probabilities. Because really, when we analyze a trade using our left brain, when all is said and done, you use the Elliott wave, you use the software, you're connecting dots and stuff like that. You're making basically an educated guess. Am I wrong? Isn't that right? An educated guess. Wouldn't you say that? Because it's not 100%. The future is unknown. So you're making an educated guess. And in the realm of trading, you're working in a realm of probabilities. And so when your educated guess is right, you win. When you're wrong, you lose. And the way to look at that is, instead of looking at it as winning and losing, remove that and look at it more as, the guess that was right, that probability worked. The guess when it's wrong, that probability didn't work. And don't assign it a good or bad. So you need to retrain your emotional mind, your right brain, to not think in terms of good or bad. Because think of it more in terms of being on which side of the probability matrix you are. Are you on the one that worked? Or are you on the one that did not work? And that's what trading is. Trading is accepting losses as simply being on the wrong side of the probability at that time. Now, when you have an edge, all right, you're going to be more on the correct side of probability than the other side, the incorrect side. That's what having an edge is all about, right? So think of it in terms of that. Just because you have a loss doesn't mean it's bad. Retrain your mind to think of it as, okay, that guess didn't work out, so I was on the wrong side of probabilities, if you want to call it wrong, all right, or just on the other side of the probability this time. And that's it, and move on. Now, one thing I do think it's a good idea to do is, if you have a losing trade, make sure you didn't make any mistakes. Okay, you can go over your analysis. There's a lot of times when I'll take a trade Patrick, I see you here. We do in the day trading room. We take a trade and we lose. And we go back and look at it. Would I take it again? Yeah, I would. It looked good at the time. Okay, so I just happened to be on the wrong side of the probability of success of that trade. So every trade has a percentage of probability of being right. And if you're winning 60% of the time, that means your probabilities of being right are about 60%, and you're going to be wrong 40%. So why would you get mad at yourself if 40% of the time you're on the wrong side of the trade? Think of that logically, right? If you want to think about that from a logical standpoint, if that helps you retrain your emotional brain, think of it like that. That why should you be mad or think you're bad or the trade was bad just because it was on the 40% probability that you're going to have a losing trade sometimes. It's kind of normal, right? So losses should be looked at like that in terms of probability. Is that clear? Good, Steve. All right, good. It really is the difference between, it will make a huge difference in your trading. Huge difference. And any feedback you want to give me on this, on people, if you've been able to conquer that, let me know. Let me know what helped you so I can share that with others here. And if you're struggling with that, hopefully this information will really help you. Because it is a tremendous difference and will increase your success rate and lower your stress level tremendously if you can think of it like that. So again, don't think of a losing trade as something bad, as you're a bad person or you don't know what you're doing, or gee, here we go again. I'm screwing up again. Don't look at it that way. Okay? We deal in a realm of probabilities. We're going to have a certain percentage that are wrong, even though we do everything right. So you can't look at it that way. Instead, go back on your losing trades and even your winning trades and see if you stuck with your analysis. Do you have a set of rules? You're following your rules. As long as you follow your rules, that's great. Pat yourself on the back, even if the trade loses, because that is what you're getting paid to do. And you're paid, your rules are lead to an educated guess. And an educated guess in a realm of probabilities will be right sometimes and wrong sometimes. What you do with this system in trading is you create it so your probabilities are on your side, giving you an edge. Doesn't mean that every trade is going to be a winner. All right, Steve's saying something here. Baseball player gets into the Hall of Fame hitting 300 and they fail the other 700 times in 1,000 at bats. There you go, perfect example. All right, and really, think about it. All right, how many times have you had losing trades and they're not, you've cut the losses short, but you've lost a few times in a row, but you're working within the parameters of your system. How do you feel? Ask yourself right now, how do you feel when that happens? Because what you want to try to feel is basically neither wrong or right or bad or good. It's just normal working in a system and in a realm of probabilities. And again, trading is such an incredible teacher of this because there's no hiding from it. In the real world, sometimes we'll do something, but the ramifications are often not felt for a long time, or the ramifications can be hidden or denied and never come to the surface. In trading, you're not so lucky. In trading, you take a trade, you're either going to be a winning trade or a losing trade. Okay. And how you interpret that is everything. And if you interpret that as working in a realm of probabilities, then really you would expect to have trades that didn't work out. So why are you upset? Okay, makes sense? Love to hear any feedback anybody has on that. So basically what I want you to try doing is going forward after this webinar, all right, take some action steps to try to maybe fix or retrain your emotional side of your brain so it's not creating frustration, revenge trading, disappointment, fear, etc. Because that's what happens, and those are the outcomes when you haven't trained your emotional part of your brain to working in an environment of probabilities. Really important stuff. This is as important as anything. Entries and exits, risk control, the whole 9 yards. It's right up there in importance with all that. You guys agree? Disagree? What do you think? All right. Yeah. Kind of the way it is, right? Anybody, and this one can take some time to fix, or at least let's say retrain, not fix, retrain. Can take some time to retrain your brain, and you have to start now. Okay, work on it now. So when you have a loss and you followed your rules, don't look at that loss as you did something wrong. Instead, look at it as that educated guess did not work out on the probability matrix of being a win. That's all. So, again, you do have to have some form of a system developed where you make sure you have an edge. And of course, that's where your left brain comes in, your logical brain, puts something together. So your win to loss ratio and your payoff ratio are producing an edge in the market. So you need both sides of the brain, but you got to make sure that that emotional brain does not interfere with your creation of unwanted emotions, okay, due to trade outcomes in a tested system. One of the hardest things I think people have, especially new traders, they kind of get blindsided by this because they don't understand when they first start out in trading how powerful this issue is. And this is why we use risk control. That's all part of the analytical part or logical part of our trading system. So when the probabilities are not on our side, all right, we're out where we should be, and the trade just didn't work that time. That's the way I want you to think it. Has anybody struggled with this or are still struggling with this at this point? And, it can occur not only in trades that are closed at a loss, but it also can occur when trades go against you. I would say most trades I take at some point of the open trade, it goes against me. Okay, probabilities indicate that. Doesn't mean I'm stopped out yet, but the trade could go against me. And you've got to, again, not let that untrained emotional side of your brain come in and cause problems. Like fear. Oh no, the trade's going against me. Oh my goodness, here I am losing again. And then that builds frustration. Then all of a sudden you're like, I'm just going to get out, right? Early. I'm not going to, you don't trade your plan anymore, which is, your stop is set at a place that it needs to be set at to give that market enough movement of volatility, of profit taking, short-term profit taking, in order for you to, ride the market up. Markets don't go straight up, they zigzag, and then you get pullbacks. And a lot of times you'll experience a pullback right after you enter the market. But, again, you don't get upset at that, because that is part of trading. You accept that and don't let that emotional part of your brain start the stress and the fear and everything else. Trading is a very emotional business. It just is. That's why you have to train that emotional side of your brain so it doesn't derail you, because the markets are really good at that. All right, so that's kind of what I wanted to cover today. We got a few minutes left, but I kind of wanted to drive that point home, because I really, really think, again, that this causes people a lot of trouble, even experienced traders. We all fight this at times, but you've got to really get a handle on training your emotional side of your brain to not look at things as bad or good in trading or in any system of probabilities, because you're going to end up on both sides of the spectrum. You're going to be wrong and you're going to be right. So instead of labeling those as wrong and right, think of them as working normally inside a system of probabilities. Okay? All right, before we wrap it up, any last minute things? All right, Jim, let's see how those stocks are doing here. All right, so what do you want to look at here? M-I-L. Okay, M-I-L-N. Let's take a look at that. All right, so you tell me, what's going on with this? Are you in it? What's your target? Why do you want me to look this up for you? What am I supposed to be telling you? All right, so you just found it, and so what do you want to know? What does your analysis tell you? I'm doing this for an educational. Okay, so you're asking, is it too late? Great question, because that really is the question, right? It's in an uptrend, right? We see that. The question is it too late? And that is the $1,000,000 question here. So we've had the answer is yes, simply because, and it depends on what time frame you're trading, but simply because you had 1, 2, 3, now 4 P pyramids in a row, and you've got to move up here. So we're not really sure if this is going to be a retracement with more lows, or it's going to keep going and go higher. So it's getting close to a retracement area there. The 60-minute chart is showing more highs and a very strong owl, but the problem is the PTF is showing only a high here at 33.20, and we're at 32.99. So that's not really helping us because that's not enough profit to really do anything with that indicator. So the next question is that what does appear to have happened here is we do have an owl stronger here. So we're probably going to get a little bit more of an upside. But let's just see and take a look here real quick and see if they were kind of in the upper realm of that target. So that kind of leads me to believe, again, is it better to get in here or here? Could you make some money if you get in here? Maybe. If you time it perfectly, you probably have to use this chart to do it, 60-minute. But you got bearish divergence, so it's more riskier now to go in here, isn't it? So probably at this time, I would try to see if we can find something better. All right, let's take a look at CARR. This is Carrier. We've looked at this one before. All right, so Carrier, okay, reaching up and making new highs here. All right, looks like when we looked at this before, we were thinking possibly a pullback, but it continues to go higher at this particular point. And so, again, big breakout there. So 60-minute chart, it would have been nice to gotten in earlier down in here. So again, if you couldn't get in early here or here on the breakouts, then anything here is going to be more risky. I'd probably just wait for a pullback at this point. Okay, and then I'd go long if I get the chance, because you've got green PTFs on all 3 time frames, but you're probably going to get a pullback at some point, so I would kind of wait on it. If you're a long-term situation here, then you could try it, and here's what your problem could be with that. We either may make a new high, or it could sell off at any time, because this could be a retracement area here. And you've blown through that, so that's a good sign. So probably another high. So I would probably look to go long here, but I kind of think I'd wait for a pullback. You'll get one. Should get one. All right, let's see what else we got here. KR, is that one? That's Lowell, I think, for you. All right, so Lowell, what are you looking to do on this one? Oh, my pleasure, Jim. The Carrier one looks really good, though. I mean, that's one you kind of want to get in there on the long side when you can. You could always use an option if you wanted to. You could go in with an option, make it at least 6 months out, but you could do that, and then you wouldn't have to worry about where to put your stop and so forth. All right, so let's see what we got cooking here. All right, so we're kind of in a sideways motion. All right, so I'd like to see it break out of one of these directions here before doing anything. Let's see. All right, so you're in this one already. Okay, all right, so you're kind of, stuck in this range. That's what happens sometimes. So I would put your stop. All right, you got a good possible bottom here. I mean, look at that reversal bar. Huge. Okay, huge. So that's pretty important. So if you wanted to put a stop under here, you could do it, or under this pyramid, you could do that. But probably at this point, I'd put a little bit of weight on that reversal bar, because even though it looks like it could go this and this, that was a pretty strong bar, elongated bar, showing that the bulls were in control and the bears lost control. all right? And then you see that going up here. So I would, at this particular time, kind of think about that. Now, I would put a stop in place because it's very possible if this is not a bottom, it'll back down. But I kind of think this looks pretty good for a bottom. All right. So I think you're okay on that one. So I think I would be more bullish than bearish on that. And you did get a pyramid too. Okay. That's kind of where I'm going with that. And you got it hedged with puts. Okay. So there you go. You know, it's always a pain when you get into a stock and then it drifts because you got all that money tied up in it. You're really not at a loss. You're really not at a profit. Hasn't hit your stop. So you're kind of like married to it. You know what I'm saying? Um, and sometimes that does happen. That's sometimes why, you know, you kind of wait for a breakout a little bit so you keep from getting in that. But, you know, the daily charts got you long. So I think you're going to be all right. Okay. All right, good. All right, well, that's it for today. All right, so half an hour. So again, I hope you found that information on emotions really important. And you know, if you do any type of active trading, you know exactly what I'm talking about. Especially if you day trade, that gets intensified even more. So try to get a handle on that because if you can, it's that goes a long way in turning things around in your favor, big time. All right, thanks so much, and we'll see you next week. Have a good one. Enjoy the summer. All right, hey, thank you, Steve. You too. Have a good one.